We're live and we're recording, so hello everyone who is watching us both here and in person, as well as those of you guys who are online with us. I'm Shanoa. I'm the president of Texas REIAs, and we tonight are in Austin. So we meet all throughout Texas in Austin, Houston, Dallas, and San Antonio. And that's part of our extended tribe here throughout Texas. So we like to say we're Texans teaching Texans how to invest in Texas using strategies that actually work here in Texas. So we're doing a little bit of a mastermind as we go through, and I'm getting to know some of the folks that are here with us tonight. So Brian was actually just telling me a little bit about some of his investing, and we were talking about some of the parallels between how Phil, my husband, and I first got started in investing and what that looked like. And Brian's at a point where he's built several houses. He's made, I'm sure, some good income, and now is looking to be able to build wealth. So in just the last 2 years that you've been investing, you've seen how the Austin market has basically doubled in value. And I'm sure, and I'll tell you, like for us, we have what we call the Bluebell ice cream investing philosophy. Does anybody know what that is? Anybody heard of that? No? Anyone? What's the Bluebell ice cream slogan? We eat all we can and we sell the rest. So very early on, we realized that every time we sell a property, we've got to split money with the government, right? But every time we buy and hold a property and watch that property double and double and double in value, that's not something that we have to split, at least until the time that we sell that property, with the IRS, with the government at all. And that is the basis for just about all of our wealth, the properties that we have bought and held. Now, the properties that we bought, fix and flips, that's the basis of our income that allows us to live our lifestyle that we enjoy. But we as we started to invest in real estate, we knew we wanted to create have three different things going on. Number one, replace the income that we had in corporate America. Number two, be able to generate wealth. And number three, be able to live in some really cool houses along the way. And real estate has certainly done that for us. So we like to keep as many properties as we can because we know that's the basis of generating wealth. And the way that we've seen the market go, just even over the last 2 years, we've seen more growth probably over the last 2 years than obviously we've seen in some cases over the last decade, right? Even though the last decade has been great here investing in Austin, some of the growth that we've seen over the last 2 years alone has dwarfed some of the growth that we've even seen over the last decade. And I expect that to continue. So if you are looking to buy and hold, now is definitely a great time to get started. In fact, I had another investor reaching out to me. So I'm often known as the market update lady or the real estate lady. So a lot of my real estate friends who are investing will reach out to me and say, hey, Shano, is it now still a safe time to buy? Is it a safe time to buy a house? You know, where do you see the values going? What do you guys think? Where are the values going over the next year? Up? Where are the values going over the next 3 years? Okay, where are the values going over the next? Yeah. So, you know, it's interesting. I never really forecast past a year. Why? Because the world has a tendency of turning upside down, and the times that it turns upside down has seemed to increase in frequency just over the last several years. So as a result, I never usually forecast after a year, but someone was asking me about whether or not prices would continue to go up. Is it a safe time to buy? Because no one ever wants to buy at the top of the market and then ride it down to the bottom of the market, right? Everyone wants to buy, you know, at the bottom and then ride it up to the top. And they also were worried about foreclosures. Who's worried that we're going to have this big flood of foreclosures that are going to hit the market? Okay, one of you and two of you in this room have hands. The other one just, I don't know how you're not on Zoom. We can interact. It's okay. You're in a safe environment. Okay. So two of you said, who are in this room, said that you have a little concern about that. I'll tell you that from what I'm seeing, literally we would need about 10,000 foreclosures to hit the market in order for me to be even halfway concerned about having an oversupply of foreclosures hitting all at the same time. And the truth is, we probably won't see a lot of foreclosures. Why is that? Government grants, FHA loans? No, why? Why? Why won't we see a lot of foreclosures hitting the market? They have a lot of equity. Yeah, some magic happened over the last 2 years that made even people who bought at the high at the last high, right? And miss all their payments for the last 12 months or maybe even the last almost 2 years to still actually be in an okay position. So that's probably why we won't see a lot of properties hitting the market as foreclosures, as long as they do what? As they sell. So just because you have equity does not mean you have cash. And at the end of the day, what are you going to use to be able to make a payment on your mortgage? It's going to be cash. And are they going to be able to refinance if they've been missing payments for the last year, 6 months, 2 years? The answer is no. So those are folks that are going to have to find other options and are going to be looking to sell. Now, are those folks going to have their house in perfect condition? MLS ready, show ready. I'm ready for my offer. Yes, I'm ready for my close-up. I'm ready for my offer. I'm ready for staging. Nah, I don't even, yeah, in some cases, yeah, right. So again, equity does not equal cash. It still takes cash at the end of the day to be able to make those payments. It still takes cash at the end of the day to be able to do those repairs. So does that represent opportunities for us as real estate investors? The answer is yes, absolutely. But is it going to be a huge flood of them? Probably not. So I hate to burst anyone's bubble who's thinking like, it's coming, it is coming. And we have seen a lot more action at the auction just over the last 3 months than what we've seen over the last 19 months, right? But we're still not going to see a huge influx of inventory coming onto the market. It will add some inventory, but I don't think that's going to slow down our market at all, because literally, because of the number of sales that we're having right now, we would literally need a minimum of 10,000 houses to hit the Austin market or any of the markets around the state, probably double that in Houston, probably double that in Dallas, to make even a dent in terms of what we call months of inventory. So months of inventory is one of the statistics that we use when we're looking at what our competition is, when we're looking at what our holding time might be, when we're looking at what our holding cost might be. So historically here in Austin, months of inventory over the last 40 years has been about a 6-month supply of inventory. Right now, months of inventory is less than 1 month in some neighborhoods. It's less than 2 weeks in some neighborhoods. It's less than 1 day. So as a result, we're so low in inventory, and we have massive in-migration, right? So that massive in-migration is creating a lot of buyers. And many of those buyers are from other states. So when they come to Texas, and even when they come to Austin, where the price is almost double, for example, what it is in San Antonio, they still come here and see what? They see a value here. They see an incredible value here, depending on what state that they're coming from. And many of the folks that are coming here from other states are coming here where they have half or 1/4 of the square footage and are paying 2 or 3 or 4x for that same square footage. So I always joke that the people who move here from California, they literally, like, as soon as they get their driver's license, I think they all shout out, "I'm rich," right? because of all that they can afford. So it's a really neat market, obviously, to be in here. And I'm curious, how many of you guys have been in Austin most of your life or all of your life? How many of you guys? Okay. So me too. So I got here when I was about 3 years old. And there are a lot of times when I've said to myself over the years, I remember when this area used to sell for this. I remember when this area used to sell for that. And I'll just challenge you guys who have been here for a long time to just try to never say that. Because let me tell you, the folks that are moving here from California, they don't remember when. They just look at the dollar, and they look at the square foot, and they look at the dollar per square foot, and they say, this looks like a great deal. And especially in this market when there's not hardly any inventory, houses are really flying off the market, and we're seeing prices go up in value, in some cases double just in the last 2 years. Now, are we forecasting? So all of you guys said that prices were going up. Are we forecasting that prices are going to they're going to double again in the next 2 years? Some people say yes, some people say no, some people don't know. And what do we want to look at? What do we want to look at to make that prediction? What are some of our major variables to make that prediction? Jobs, supply and demand. Yeah. So how does supply look? Short. So Brian said he built like 15 homes in the last 2 years. That's it. Really? You added 15 to the supply? Really? Do you think you could do a little bit better than that? The truth is, if you look at the building permits, which is our closest leading indicator of what our inventory, our supply line is going to look like and how it's going to grow, what are you going to see? Are you going to see another 10,000 homes being built next month? Do we need to see another 10,000 homes being built in the next month? The answer is yes, to kind of get what we call a market equilibrium. But the truth is, if you go and look at the building permit numbers, you'll see that we're building usually less than 2,000 or 3,000, or we're getting less than 2,000 or 3,000 permits a month, and that's just not near enough to satisfy the demand that we have, and to satisfy both the internal growth that we have as well as the external growth that we have. So yeah, it's a function of supply and demand for sure. So if that is your biggest predictor, people are arriving, right? People are arriving, and we're not building. What is that going to tell you is going to happen when it comes to prices? They're going to continue to go up. So for those of you guys who are wanting to invest in long-term buy and hold, this is a great market to do it in. I'll tell you, my husband and I were looking at buying an asset, and we were trying to figure out how we're going to finance it. And I had said what is also known as blasphemy in our house. What do you think that is? What do you think is blasphemy in the house of a buy and hold real estate investor? Sell it. Honey, this house, we bought it for $120,000. It's now worth $575,000. Let's sell it. And you know what he said to me? I quote, "That's the dumbest idea I've ever heard." And you know what? He was 100% correct. Because why? Because again, we're going to watch those prices continue to go up, and we want to hold as many as we can. So we buy all we can, we sell, we eat all we can, and we sell the rest. We want to eat and save and keep as many as we can, and we want to sell just enough to fund our lifestyle. Beyond that, we're just splitting stuff with the government, and we don't necessarily need to do that. So usually at some point in the summer or some point in the fall, Phil and I will have a conversation, and he'll say, like, "All right, honey, do we got enough income? Can we keep the rest?" So what you guys will find as you start investing, you'll ask yourself that question: do we have enough income, or do we have enough income forecasted? Can we keep the rest to keep them as rental properties? So that's one of a little bit of tribal knowledge to share with you. And obviously one of the things, Brian, you said that you said something like 90% of real estate or 90% of millionaires made their money in real estate. And I've also heard that 89.5% of statistics are made up on the spot. So I'm wondering if I'm just curious, Brian, if maybe, I don't know if that number is exactly right, but I think it's really close. McDonald's is not in the business of hamburgers. McDonald's is in the real estate, in the business of holding some of the best real estate that's out there, right? And dispositioning it at some later point. It's funny you say that, because Sears, so a lot of the Sears locations, the older ones, were in these downtown areas that for a long time were super sketch, but now are becoming very popular. So now they're repurposing. There's an opportunity to repurpose some of those sites. So for sure. And then I think what's key and is, as you're looking at different assets, don't look at necessarily what they are today, but look at what they could be. Look at what's called their best and highest use, because their best and highest use, to your point, Brian, may not be a McDonald's anymore, right? It may not be a Sears anymore. It may be a high-rise condo. So that's a great way to be able to think about some of those different assets and what you're buying, right? What you're buying ultimately. So Garrett, I see you're here today. You've been so kind to sit closer to the front. I appreciate that. What brings you here? What are you looking to learn? How can we be of service?
I've been kind of getting into it more seriously in the last couple of years, real estate investing that is. Also looking to do buy and hold. I'm still kind of wet behind the ears. I just have 6 stores right now, and I'm trying to find people or a group of people where I'm kind of the smaller fish as opposed to my current social circles. I'm kind of the biggest fish, and I'm looking to find other people I can learn.
So Garrett, that was an interesting share. Did you guys pick up on that? So I mean, it's cliche to say that your net worth is a function of your net work, but I think never is that saying more true than for us as real estate investors, right? So associating yourself with people who are doing more than you or have done more than you, who have more contacts than you, who have more resources than you, whether that's their personal resources in terms of financials, whether that's access to other people who have those resources. So when it comes to real estate, when it comes to funding, there's a lot about who you know and what your experience has been. So, and then to raise the pH of the group that you're hanging around so that you can maybe make more money. Not maybe, but definitely. I think that's I think you're at the right place. So I'll tell you that when we first started investing, the first thing that we did is exactly what all of you guys are in here doing today, which is we joined our local real estate investor association. And it was there that we got the contacts, the contracts, and the contractors. All of that tribal knowledge, right, that helped us build our business. All of those contacts are people who were both funding our deals initially and the people who were bringing us deals initially. And so one of the reasons why I stand up here today is number one, to pay back what this association has done for me and meant for me from a financial standpoint, from a friendship and camaraderie standpoint as well. But also it's an opportunity for me to get more deals and get more money and get more resources. So that's one of the reasons why I keep coming back to it. In fact, right after I joined the association, the then president tapped me and said, Shanoa, would you like to be the membership coordinator for the Real Estate Investor Association? The pay is $0 a year, but you get a free membership into the association. And at the time, 2 decades ago, free membership into the association had a value of $60. What do you guys think about that? What do you guys think about that? I think that's the equivalent of working for about 10 cents an hour, right? But what did I do? Did I take that position? Yeah. Why did I do that? To learn? Why? To meet people? Why else? I want to know who the players were. I want to know who the players were versus the people who were just talking about real estate. I want to see who was actually doing stuff. I want to see who was actually funding stuff. I wanted to go to their projects. I wanted everyone to pass by me every single time they went through the door. And that had a lot of value to me. And that was one of the ways that I was able to kind of leverage the association to further build out my network and really get to know many of the members in the group. In fact, some of them I'm still friends with and still talk to this day. And it's been an incredible blessing to be part of this group and now, of course, to lead this group and to continue to be able to create and build this tribe and create and share that knowledge and share resources, share best practices so that we can all grow and be successful and take it to that next level. So Garrett, I like where you're going. Garrett says, I only have 6 doors. How many of you guys want to be Garrett? Okay. Yeah, nobody feels sorry for you. I just took a poll. Okay, I can take a second vote because now they're going to take it more seriously now. No one feels sorry for you, and Brian, same for you. Nobody feels sorry for you. But the truth is that, can you do better? And the answer is 100%, right? Now, I think, and that's a phrase that I'm loving right now, Kaizen. Somebody know what that means? Better every day, change every day. Change is good. Let's get better every day. So no regrets, right, about anything that's happened in the past, but it's important to, and I think you made this point as well, to not just associate with people with a common past, but really associate with people with a common future. And this group, right, could be that future. So when it comes to success and leveraging the network, I always say it only takes one person, one opportunity, one lead, one deal to change your life forever. And I can tell you that person is probably in this room right now to be able to make that happen for you. Because when we first joined the association, that person was in the room for us. And that person opened up the kimono so we can kind of get back in there and check it all out and do it in a way that was both profitable and safe. So that's an important part of the journey, because you see a lot of new real estate investors who get really excited about that deal. And what is excitement? What does excitement cause? What does too much excitement cause? Compulsion, anxiety. What does too much excitement cause a real estate investor to do? Overextended. What's another way of saying that? What did you say? Somebody said it. Overpay. Oh, that never happens. It happens all the time, especially if you're buying, for example, from a wholesaler, right? It's very easy to overpay. It's very easy to fall in love with that deal. So I'll encourage you guys. And how do we make sure we don't overpay? Knowing the market. You're whispering, sir, but I can sort of hear you. But you're throwing out some good knowledge here. Systemize. Okay. You were whispering. Check the numbers yourself. So what's Warren Buffett's number one rule of investing again? Somebody tell me. Never lose money. And his number two rule? Never lose money, right? How do you make sure you do that? It's all about your due diligence. It's all about your due diligence. So what kind of due diligence do you need to have as a real estate investor to make sure that we play it safe and make money? No one? Know your market? What do you have to know specifically? The house? What specifically about the house?
The value, and then if you're going to put something into it after repair value, long-term gain, capital gains.
Okay. What do you really need to know? Tell me, guys, what's the real estate investor maximum allowable offer formula? If you do not know this, you will not leave my meeting without knowing it. Thomas, lock the doors. Now, please write this down. I'll be ashamed and embarrassed if not everyone knows this formula. So is it Robin? So Robin said it. So please write this down. 70% of the ARV minus repairs. So I use an acronym there, ARV. What does ARV stand for? After repair value. 70% of the ARV minus repairs. That's the typical formula for what kind of house? For what price range house? Single family house, yeah. For what price range? Brian says any price range. Anybody else? Are you going to use 70% of ARV minus repairs? And this animal does not exist in Austin, but in the outskirts it does. Are you going to use 70% of ARV minus repairs on a house that's a $100,000 house? Why would you not? Why would you not? So how much do we make? Let's roll this. Let's roll this back and forward, if you will. How much do you make if you make a 70% of ARV minus repairs offer? Keep the doors locked. Yeah. 30,000? Brian, come on. Brian, you must live in HGTV land, because in HGTV land, they have no closing costs on the buy. They have no holding costs. HGTV land is certainly not a city in Texas where we pay property taxes, right? And then HGTV land also does not have closing costs on the resale. HGTV land does not have realtors that typically charge somewhere between 5 and 6%, right? So let's all agree that we're not in HGTV land and that we're not going to go for TV profit, because that's not real profit. So how much are we going to make on a $100,000 house if we're making an offer that's 70% of ARV minus repairs? Typically, we're going to make somewhere between 10 to 15% of the ARV, between 10 to 15% of your ARV. In what case might you make 10 versus 15? If you're going in all cash, you're going to make 15. If you're getting hard money, your hard money partner will typically take about 5% of your ARV for their profits, right? So 10 to 15% of $100,000 is somewhere between $10,000 to $15,000. Now, my least favorite quote in real estate investing is this. My renovation project came in on time and on budget. Said no one, ever, right? So if you're only making 10 to 15,000 and something goes wrong, like unexpected, oops, I got to replace the roof that I thought we could kind of, patch along, or oops, I thought we weren't going to have to replace the air conditioner. I thought we were going to patch along. What is that roughly? That'd be like all of your profits. So on something that's that low in price, even though even though the profit percentage, 10 to 15% is the same, your margin dollars are really tiny. So if you make a mistake, you're in a lot of trouble, or you can get yourself in a lot of trouble. So sometimes on these $100,000 houses, which I know don't exist here in Austin, but they do in the suburbs, right? And even in the suburbs of the other big cities. I've got on the screen right here exactly how much you make and how you break that down, what that looks like in terms of closing costs on the sell, what that looks like in terms of closing costs on the buy, what that looks like in terms of monthly holding cost as well. So but when you're operating on a $500,000 house, which is not atypical, very typical here in the Austin area, and we're talking somewhere between 10 to 15% of your ARV in terms of your profit, that's somewhere between $50,000 and $75,000, right? So if something goes terribly wrong, like you need a new roof, okay, $8,000, you need a new air conditioning and ductwork and everything else, maybe another $8,000. That's $16,000. That sucks. That's technical term, by the way, technical real estate term. That sucks, but you're still making a lot of money. So as you get higher up in terms of the dollar ARV, and assuming that you stick your repairs and assuming that you stick your ARV, can you afford to pay a little bit more than that 70% of ARV minus repairs number? And the answer is yes. So on the low end, you cannot because the margin dollars are so small, but on the high end, you can because the margin dollars are much bigger. Now, can you say, and gosh, this is the only market that I've invested in that I've felt even just a tiny bit comfortable saying this, but can you forecast what your property is going to be worth in 6 months? Some people say not right now. You better have a pretty good idea. Are you going to forecast it's going to be higher? Probably, yeah. So as a real estate investor, it has been a hardcore philosophy that I've never strayed from to not vary that ARV because I don't want to, I like to invest in real estate. I don't like to bet when it comes, if I'm going to bet, I'm going to go to Vegas to bet, right? So I typically would not, and forever I've stood by that, and that has really served me. But in this market, this would be one of those markets where you could actually pay or increase your ARV, but I wouldn't increase it by too much because again, you don't know exactly what's going to happen. You can pretty much know what's going to happen, at least in the short term. And then if you're holding it long enough, can you pay more than that 70% of ARV minus repairs? If you're holding it for a buy and hold rental. Anybody have rental property in here? Does anyone have rental property in the room? Okay, yeah. So Garrett, let me ask you, what did you do? Do you know what kind of a discount you got on those rental properties when you first purchased them?
I got them for essentially
market value, yeah.
But my strategy is basically to make sure that it's cash flowing pretty significantly.
Okay.
That way, even if there are fluctuations up or down, then I'm somewhat protected. And
Okay.
if I'm going to hold that really long term, which is my strategy, then it doesn't matter. Even if 2008 happens again tomorrow, I'm going to hold it until we come out of the back.
So the secret is to building wealth as a buy and hold real estate investor, which I know some of you guys want to do, is to hold on to it long enough for that magic to happen, right? So I think that's the right strategy. So guys, we're going to do a little transition. So we're going to start a separate recording and invite some other people along because we're going to be broadcasting on